You didn't lose that trade. You lost it 3 days before you opened the chart. Most traders think the loss happens at the stop loss. It doesn't. It happens in your head way before that. By the time you click buy, the outcome is already decided by what's going on between your ears. I've blown accounts, I've moved stop losses because I knew price would turn. I've revenge traded a red day into a red week. Every single time, the technical setup was fine. I was the problem. Let's talk about why. Here's the first thing nobody tells you. The market has no memory. It doesn't know you're down 4 trades in a row. It doesn't know you need this win to pay rent. It doesn't owe you anything. But your brain doesn't work like that. Your brain treats each trade like it's connected to the last one. Win, lose, you start building a story. I'm due for a win. This pattern always works for me. I can't lose 2 in a row. That's not analysis. That's superstition wearing a trading hat. Each trade is an independent event with a random outcome, even inside a strategy with a real edge. Your edge plays out over a series of trades, not in any single one. If you don't accept that at a gut level, you will fight the market every time it doesn't confirm your last outcome. Second thing, most traders don't have a strategy problem. They have a discipline problem wearing a strategy costume. You backtest a setup, it works. You take it live. First trade goes against you a little, and suddenly you're adding a filter mid-trade that wasn't in your rules. Second trade, you skip the entry because it doesn't feel right. Third trade, you move your stop loss 10 pips further because you don't want to be wrong yet. None of that is trading, that's negotiating with the market. And the market doesn't negotiate. I did this for 2 years before it clicked. I had a system with a real statistical edge, and I was inventing new rules on the fly, live, with money on the line based on how I felt in that exact moment. The system wasn't broken. I was. Third, revenge trading. This is the big one. You take a loss. It stings. Instead of walking away, you immediately look for the next setup to get it back. You size up. You skip your checklist. You're not trading a strategy anymore. You're trying to fix an emotion with a trade. Here's the brutal part. Revenge trading doesn't feel like revenge trading while you're doing it. It feels like conviction. It feels like I see it clearly now. That's the trap. Your brain will manufacture confidence to justify the trade it emotionally needs to take. I've turned a manageable 2% loss into a 15% drawdown in one afternoon doing exactly this. Not because the market changed, because I needed to be right immediately and I was willing to pay for that feeling. Fourth, moving your stop loss. This is the single most common way traders turn a small defined loss into an account-ending one. You place a stop. Price approaches it. Instead of letting it do its job, you move it just a bit, because you don't want to accept you were wrong yet. That stop loss wasn't a suggestion. It was the price you already agreed you'd pay to find out if you were right. Moving it means you didn't actually accept the risk when you took the trade. You just pretended to. Every account blow-up I've seen, including my own, has the same fingerprint somewhere in the sequence. Fifth, FOMO, fear of missing out. You watch a move happen without you. Your brain doesn't process that as I missed one opportunity out of thousands. It processes it as a threat, so you jump into the next thing that even slightly resembles a setup. Late, oversized, with no real plan, just to not feel left out again. FOMO trades aren't trades. They're an attempt to make an uncomfortable feeling go away, disguised as market analysis. So where's the actual edge? It's not in a better indicator. It's not in a secret pattern. The edge is in doing the same correct process over and over, without letting any single outcome change your behavior. Win or lose, same size, same rules, same exit. That's it. That's the whole game. Most traders can't do this because it's boring and because it means accepting that you will be wrong. Often, and that's fine as long as your losses are small and controlled and you didn't sabotage the process to avoid feeling wrong in the moment. You don't lose money because the market is unfair. You lose money because you haven't built the mental discipline to execute a plan you already know works. Fix the process before you fix the indicator. Fix your head before you fix your stop loss placement. If you've done any of this, moved a stop, revenge traded, chased a FOMO entry, you're not broken, you're normal. The traders who make it aren't the ones who never feel this. They're the ones who built a system strong enough to survive themselves. Next video, I'll break down exactly how to build that system, step by step.